The Fed is starting QT, which could potentially spell danger for markets. But is it already priced in, or is there further downside to come? That is a question that I'm going to be answering in this video. And I'm going to be showing you 4 charts, which I think are absolutely crucial to keep your eye in this market. I'll also be showing you my strategy right now for trading versus investing, running through some trades, and having some fun at the end with a Q&A in the show. It's going to be a massive show. Let's get straight into it. And what actually happened overnight was that the Solana blockchain suffered a new network outage. So this is typical for Sol. I did a tweet earlier. I said the market might be inconsistent, but at least Sol is staying consistent and it's consistently going down. So it faced downtime after the production of new blocks on the network ceased. Solana Beach showed that the validators didn't process new blocks for at least 5 hours, and they actually shut down the validators due to network congestion. Right now, the Solana blockchain did come back online, but it did impact the price, and the Solana chain went down 12% for the day. So quickly, my take on this is that the tech simply isn't ready. I think it's very good when it works. It's extremely fast. It's extremely scalable. I told you guys on yesterday's show how I really like the vision that the Solana team is going after, and I stand by that. However, until these outages are eradicated, which I believe they will be in the future, but until that's the case, then obviously it is murky times for Solana. And I don't like to see instability in any blockchain. So that was the big breaking news in terms of the L1s overnight. But even bigger news, Sheldon's show last night went absolutely massive. And if you guys actually got onto these ADA shorts, you'd be up roughly 25 to 40%, depending on when you exited. If you hit that TP, you'd be up close to 40% or more on this trade. So it was a great show. I had over 10,000 live viewers, and I was joining along live and trading with Sheldon. So it was a great stream. And it's kind of inspired me to kick off my trading journey a little bit. I've been trading more and more over the past few days. So in light of Sheldon giving live trades on the show, I thought, well, why don't I start doing it on my show as well? So I'm going to give you some of the trades that I'm doing. Bear in mind, I'm not a trading expert like Sheldon, but I'm giving it a crack, and I've been trading for a few months now for varying success. But, I believe that if we stick to stringent take profit and stop loss strategies, then you can significantly minimize your trading risk in this market. So I am using a small percent of my portfolio to trade on BYBIT out of my total portfolio. And what I actually did this morning was I opened a Bitcoin long. So when I look at the Bitcoin chart right now, we obviously had this major pullback overnight, which was roughly a 7.34% move. Now, on the hourly chart, we can see that we have this downtrend starting to form. So as a more short-term trade, I saw that we were pushing below this trend line. We hit a little bit of a retest on this hourly candle here. And then after the retest, I opened my trade here, which is basically a little bit of a leverage long. So the entry that I got on this was 29,644, which is corresponding to this trend line here. And I opened it with 7x leverage, similar to what Sheldon was doing on the show yesterday. And, I put in a pretty strict stop loss at the $28,500 mark, I believe. So I put in my entry, I put in my stop, and I'm opening this trade. I'm roughly up 6% at the moment on this trade. But if you guys want to get in on a short-term trade on this Bitcoin, I do think potentially we do see a little bit of a short-term rally to the upside. So what I'd be looking to do is I'd be looking to catch this retest if we do come down to 29,500. Remember to set your stop a few percent below this trend line. So, you're not exposing yourself to too much risk. But I'm happy to ride this one out, potentially up to 30,500 to 31K. So that is the trade that I have open at the moment. But obviously Sheldon is the trading expert here. So if you're watching the show last night, congratulations on all of your ADA trades. We did very, very well off that trade. I actually had to go to bed because it was like 1 a.m. in Australia last night. So I didn't have the luxury of hitting that TP because I wanted to just bank some profits on that. But it was a very cool show as well. And it's kind of inspired me to start incorporating a little more trading into these shows. So whenever I have a trade, a live trade, or, I've got a trade open, I'm going to be sharing it on the show with you guys. So this is my Bitcoin trade at the moment. We're sitting nice at 5.7%. We did catch a pretty nice retest of trend here. And yeah, once again, set my stop loss pretty tight below. If you do want to trade and get involved in trading, you can sign up for a link using BYBIT. We've negotiated some amazing deals for you guys. There's I think up to $4,800 sign up bonus. And Ran is also 10xing BYBIT portfolios on the show. So if you don't have a BYBIT account, I highly recommend signing up for one using the link in the description and taking advantage of some of these offers. And obviously it's great because I think BYBIT's one of the better platforms to use. I've been using it over the past few weeks, and I'm enjoying using it a lot. So if you want to sign up, join along with the trades on Sheldon's live show, on my live show, then sign up using the link in the description, and let's have some fun trading, because right now it is the market is very shaky. So we're getting some good opportunities amidst volatility to make some money on these short-term trades. Now, just remember, the majority of my portfolio is still in my hodl bags, and the majority of my portfolio is still being used to farm and generate passive income through farming. My strategy hasn't changed in that respect, but my trading portfolio, as you can see, is just very, very small, $500 to $1,000 trades. I put 5K in my BYBIT. I'm playing around with it. So make sure that whatever you trade with is a small percentage of your total portfolio. At the end of the video, I'll be going into the exact breakdowns of how my portfolio looks in terms of hodl, in terms of trading, in terms of farming. But for now, just remember to use a very small percentage. All right. Big news today, and I want to talk macro for a little bit and work out where I think the Bitcoin price is headed over the next few months. And we've got some indicators with the Fed announcing the start of quantitative easing quantitative tightening tomorrow, which means they are reducing the balance sheet at the moment. And I think this has big ramifications amongst crypto, amongst equities, because it's a very drastic monetary policy shift that we haven't seen in a couple of years, probably not since 2019. And I want to break down exactly what this means for the market and kind of what the Fed is aiming to do here. So we can see that Biden says Powell has noted the Fed has a laser focus on inflation. So it's very clear at the moment, the major focus from the Fed is to quell inflation. And we can see this due to the Fed starting their quantitative tightening tomorrow. And it's a process where $47.5 billion a month will be tightened for the first 3 months, and it will increase to the full $95 billion 3 months later. They're basically trying to reduce their balance sheet by $7.6 trillion by 2023 end. And this balance sheet reduction comes after some of the biggest increases, or the biggest increase we've ever seen in the balance sheet of all time. So we can see, if we go back to July, and I'm going to zoom in here so you guys can see, if we go back to July in 2019, we can see that their total amount of assets was 3.7 trillion. Well, throughout 2020, obviously the money printer went off, and today their total assets sit close to $9 trillion. Now, what the Fed wants to do is take this $9 trillion and reduce it by a further $7.6 trillion by the end of 2023, which would be, I don't want to use the word catastrophic, but if that was the case, I guess it would be for equities, because that is a massive taper to the balance sheet. However, is it likely that this will actually occur? Because obviously that those are quite ambitious goals. And, there's a lot of speculation that, if the Fed does cause a recession by doing this, then will they be incentivized to continue with QT? My initial response to that would probably be no, but let's dig into some of the data behind what they're actually aiming to do with QT, and look at the historical performance of markets in the midst of QT to work out, where the crypto market may be headed. So what they're doing is they're shrinking the balance sheet by an ideal $1 trillion per year, or $1.1 million per minute, as I showed you before. This was March 2020, and this is where we're sitting now. So roughly a double of the Treasury assets since 2020. The balance sheet has increased from, as I said, 4.3 trillion to 9 trillion. And with QT commencing, they're now trying to shrink the balance sheet. Markets have already begun to price this in. Treasury yields have risen in tandem with declining equity valuations over the last few months. And we can see that it's very clear that equity valuations have increased. Treasury bonds have increased drastically over this period. As I get up the right thread, we can see that the yields on Treasury bonds are up from 1% to 3%. So the market has kind of preempted this a little bit, and it isn't something of a knee-jerk reaction that we're getting with the Fed announcing this. Markets aren't stupid. They do price things in before they occur. The question we have to ask ourselves as investors is it fully priced in yet? Or is there still further downside to come? Because we know that markets historically react negatively to QT, especially if it triggered a recession. So what is QT? Just so you guys are on the same page. The note taker does a great thread to break this down. So this is a dictionary monetary policy that's only been ever done in the US once before, from 2017 to 2019. They're basically reducing liquidity in the economy to combat inflation. So we know, due to the mass money supply that came onto the market, as we can see, due to the M1 here, the money supply had the highest increase it's ever had in a single year in 2020 and 2021. The Fed wants to curb this, obviously, as this affected inflation by implementing QT. So the size of the Fed's balance sheet has increased drastically. So they want to bring it down. So quantitative easing, which is the opposite of QT, is when the Fed buys longer-term securities and mortgage-backed securities from the open market. However, with QT, which is the opposite of QE, which is what they were doing in 2020, the Fed reduces the amount of money that's reinvested into Treasury securities. So instead of propping up the economy like they were doing in 2020, now what they're trying to do is reducing the amount of money that they're investing into the economy, which obviously, as a byproduct, results in lowered equity valuations, which is one of the side effects of QT. So they want to shrink the balance sheet by roughly $1 trillion annually. I think the interesting observation here is that this is a much faster pace than the last round of QT in 2019. Powell said he expects that it may take 3 years for the balance sheet to normalize, although there's no fixed time frame. And I think this is really interesting because we can look at the previous impact that QT has had on equities to evaluate potentially what this impact could have on crypto. We know that the crypto market is highly tied to the NASDAQ at the moment. So we have to look at equity valuations in order to determine where crypto may be headed. Obviously, crypto is a more risk-on version of the NASDAQ. It's a slightly extended version, meaning that if the NASDAQ went down 20%, a Bitcoin could potentially be hit a lot harder. So JD Henning published a great analysis which tracked the performance of the S&P, which is the share market index of the US, the VIX, FANG stocks, and more during prior quantitative easing and quantitative tightening cycles. So here's how the S&P performed during the last QT cycle. Returns turned sharply negative when QT's pace was 50 billion per month. So we can see that they're aiming for roughly this 50 billion per month rate. They're aiming for 47.5 billion for the first few months, and then a full increase to 95 billion over the next 3 months. And we could see that at similar levels of 50 billion, we saw that the S&P declined 13.97% over a period of 3 months, which is an average monthly decrease in the share market of 4.65%. QT removal, when basically QT was removed from the market, they stopped quantitative tightening. The S&P returned plus 17.82%, which resulted in, over an 8-month span, a 2.22% increase in assets. Now, of course, past performance is not indicative of the future, but equities have consistently sold off year to date in anticipation of the Fed's tightening. And this comes down to the major question: is QT already priced into the market? As we can see, obviously, equities have taken a hit. Bitcoin has taken a hit. And my initial response to that would be it largely has been. This is obviously just my opinion, not financial advice. But I think that the large amount of the ramifications to do with QT have already been priced into the market. However, I think there is still further downside. And I think this is dangerous for us as investors, because if they do stick to this plan and ramp up to $90 billion QT per month, I think that could have ramifications across crypto, although it is important to note that QT impacts don't really start until mid-June. Most of it is actually reduced at non-competitive Treasury auctions as the Fed lets these securities roll off their balance sheet. So it isn't going to be as impactful tomorrow as potentially it will be until mid-June. But it's something to take note of. And there's certainly some charts that I'm looking at to keep tabs on this right now. Because Bitcoin has never once in its history been in a bull market while the Federal Reserve did quantitative tightening. And once again, past performance isn't indicative of future performance, but it is important to note that this has never been the case before. So we would very much be fighting trend going into a bull market at the moment against some of the macroeconomic conditions that are occurring. But if this does happen in June and the QT impacts start to take effect, interestingly, at the same time, we also have the CPI. We have a lot of company data starting to come out. Something certainly brewing here, and it could potentially have negative ramifications for the crypto market. I'm not shying away from that fact, although some of the signs from the charts are suggesting, a short-term rally very much could take place. Obviously, we are tied largely to equity, so we have to look at what the NASDAQ is doing. And at the moment, if I use the NASDAQ as kind of a reference for where I think Bitcoin could be headed, we can see that we have had a little bit of a push up in the QQQ, which is the NASDAQ index, 8%. We can see it's been in a downtrend for quite some time. We pushed off this resistance at this support at 280, and we've shown some strength since then. But when I look at the chart as a whole, the NASDAQ chart as a whole, obviously these 2020 lows at 168, are still a large way away. And obviously, we have had such a drastic increase in the money supply since then. So maybe it isn't realistic to expect that massive 45% pullback, but even to previous highs, that is still potentially 22% downside. So it's a very important chart to note. So this is what I'm doing to kind of evaluate QT's impact, evaluate the monetary policy impact on the crypto market. I'm keeping my eye on 4 key charts. Now, these are the 4 major charts that you have to keep your eye on if you want to stay ahead of the game in this market right now. And this is some of the biggest tips I could possibly give you in the market at the moment, because these 4 charts could be the difference between you getting wrecked and you actually coming out ahead from this market. I'm not afraid to short this market through trading. I'm not afraid to long this market, but in order to get more clear direction, more guidance in terms of our actions regarding trading, regarding accumulation, we have to look at major charts which can indicate where we are headed. So I did a thread on this, and I posted the 4 charts that I think you must keep your eye on over the coming months. And I've done a little bit of charting to help you guys understand them, and I'll be explaining what these 4 charts are and how you can use them. The first chart is obviously the Bitcoin dominance chart. Now, you guys know that this is a measure that indicates what percentage of the total crypto market cap is currently comprised of Bitcoin. It signals where capital is being allocated and is generally an indicator of consumer sentiment. So if dominance goes up, alts are losing value relative to Bitcoin. And if dominance goes down, alts gain value to Bitcoin. And I think this chart does a great job of explaining it. Because it lays out the scenarios of how alts will respond to certain Bitcoin price movements. So then we can reverse engineer this by charting the Bitcoin dominance chart and then getting a better indication of where Bitcoin dominance is headed. And obviously this has a trickle-down effect into the alts. So Bitcoin dominance increases, meaning the percentage of the total market cap that Bitcoin holds over the crypto market goes up, and Bitcoin increases in tandem with it. This means that alts generally decrease in price. If Bitcoin increases, Bitcoin dominance increases while Bitcoin price decreases, then it usually means alts are dumping. Because when Bitcoin dumps, alts are usually, an extension of the Bitcoin price. They'll tend to decrease faster than Bitcoin in most cases. So that is the scenario that will occur when Bitcoin dominance increases. If Bitcoin dominance decreases, but Bitcoin increases, this means it's alt season. This is the scenario we all want. And this is what we are looking for on the charts. A decrease in Bitcoin dominance. So Bitcoin dominance coming down, an increase in the Bitcoin price. So the Bitcoin price having a push up in the market, let's say, pushes up to the 31K region. And then also in tandem, the alt prices increasing, because usually what will happen is if Bitcoin dominance is decreasing, Bitcoin price is increasing, that typically indicates an alt season. Now, I don't think we're ready for an alt season quite yet. And I'll show you the Bitcoin dominant chart in a second, just because of the macro uncertainty right now. And typically, a lot of things need to go right in the market for alt season. That's why you can see out of these 6 Bitcoin dominant scenarios, there's only one scenario where alt season actually occurs. And that's because it's a rare occurrence. And a lot of stars need to align for the alts to perform in this way. But it doesn't mean you can't get alt gains irrespective of Bitcoin dominance. We can see that if the Bitcoin price is stable, alts can still see massive increases amongst the decrease in Bitcoin dominance, or alts can stabilize in 2 scenarios. If Bitcoin dominance increases, Bitcoin stable, or if Bitcoin dominance decreases and Bitcoin decreases. So those are just some of the scenarios that you can use to kind of evaluate how alts potentially could respond to a move in Bitcoin. Now, over the last few weeks, investors have taken an increasingly risk-off approach as capital reallocates from alts to quality crypto. So the Bitcoin dominance increasing, going on this rally, which is looking like a 12% rally at the moment, indicates that consumer sentiment is shifting to a slightly more risk-off approach, meaning investors would rather park their capital in a Bitcoin than some of your altcoins, your L1s, etc. So a continued push upwards would likely see liquidity drain from alts. So this is the chart that I'm looking at the moment for Bitcoin. So on the daily chart, we can see that we did break trend at 44.72%. We're currently sitting at 46.55%. So since the break of trend, the Bitcoin dominance has increased 4.35%, which has obviously seen a slight decrease in altcoin prices. But if I go a little bit more into the shorter time frames here, if I go, let's say, into the 30-minute chart, we can see that we're seeing a little bit a little bit of price action in the short term right now, with Bitcoin dominance breaking below this trend. So this could indicate a potential pullback. Now, remember, this is a very short time frame, a potential 1% pullback, which would obviously be good for alts. Now, over the last day, we can see that Bitcoin has actually decreased 7%. Many of these alts are only down 6 to 7%. So the sell-off did happen prematurely for alts. Investors kind of preempted this. So right now, the Bitcoin price is what's mostly being affected, obviously barring some of these altcoins like Solana, which has had issues. So Bitcoin dominance is something I've got my eye on. If it continues to break down, this is generally a positive for crypto, as we can see, for altcoins, as we can see through this chart. If Bitcoin dominance decreases in all three scenarios, alts are either increasing or stabilizing. However, if we do get a scenario where this continuous upwards push occurs, like we can see through the break of trend here, then that would result in continually decreasing alt valuations, or unless Bitcoin was increasing in tandem with alts at a faster pace, then that's a scenario when alts would perform well amongst a Bitcoin dominance rise. But remember, if Bitcoin is to pump alongside alts, there's a lot of liquidity that needs to come into the market. There needs to be firepower to underpin this market if you want to get that Bitcoin pump alongside the alt pump, like we saw last year in May, like we saw last year in November. However, with such macro uncertainty, I do question whether or not investors, especially these larger institutions, are comfortable entering at these levels. Obviously, with QT, there's a few scenarios that need to play out before I imagine a lot of these institutions will be comfortable jumping back in. But as we know, crypto is largely retail dominant, so consumer sentiment basically rules all in crypto. So we would need to see an increased sentiment for the an upwards push in Bitcoin dominance and the alts to occur simultaneously. Now, the second chart you have to be looking at for anyone that holds altcoins is the Ethereum-Bitcoin chart. This is the quintessential chart if you are tracking alts, because we know that Ethereum typically leads the altcoins. So when we're resetting the cycles, when we're resetting for a new push upwards, typically what happens is Ethereum will outperform first. We'll see the Ethereum price rally, and then the altcoins, typically liquidity is filtered down from Ethereum into these other major L1s, mid caps, small caps, etc. So we have to track the ETH Bitcoin chart to work out how ETH is performing against Bitcoin, because that will give us an indicator of whether alts could potentially going. We have to remember that Ethereum still leads these altcoins most of the time. So if Ethereum / Bitcoin goes up, that means ETH is obviously outperforming Bitcoin. If Ethereum Bitcoin goes down, that means ETH is bleeding against Bitcoin, suggesting people are flocking to Bitcoin as a potential safe haven. So let's look at the Ethereum Bitcoin chart right now to work out what's happening. And we have seen a little bit of a breakdown in this chart on the daily. We did break trend to the downside. Currently, since that break of trend, we've been sitting at 9%. For all you traders out there, if you did see this break of trend occurring, this would be the perfect time to put in an Ethereum Bitcoin pair trade. Now, it's not something Sheldon covered on the show, but what you can actually do on BYBIT is trade against pairs. So instead of Bitcoin USDT, you can trade Ethereum Bitcoin, or maybe on FTX. I haven't played around with this on BYBIT. I usually do these pairs on FTX. But on many exchanges, you can actually trade pairs. So if you're looking at the Ethereum Bitcoin chart, there's scenarios where you'll be able to hit a short position here on the break of a trend, set your stop loss slightly above, obviously in case it gets invalidated, and then you would have been up a potential 10% trade here from the bottom and 11% trade. Now remember, if you're using leverage, this compounds the effect of these trades. So on a 7x leverage, an 11% move down would be a 77% gain for your portfolio, because it's 7x. So for every 1% move, your position moves 7%. So that potentially would have been a very good trade to hit. So this is a chart for that reason that I'm looking at. And it's not only Ethereum that this chart is dictating. This chart is dictating many, many altcoins. If we chart a lot of altcoins against Bitcoin, we'll see a similar scenario occur. Obviously, since Ethereum is tracking Ethereum tracks the altcoins at the moment. So the break of trend signals that pullback amongst alts. Reclamation of this trend would be very bullish. So if we did see a scenario where we come up, we break this trend, we test again at this region here, that could potentially add a bit of rocket fuel to come up and test these highs, which is a 29% move. But that is the bull case for alts, and I don't think in this current market that is a likelihood at all. In fact, it's probably more likely that we do gravitate towards this trend and then, likely get rejected. So that's a trade that I might make at some point soon, but it's one that I'm keeping my eye on, and it's certainly for that reason a chart that you need to keep your eye on. All right, so the third chart that I'm keeping my eye on at the moment is the QQQ. Now I talked about it a little bit before, but until proven otherwise, Bitcoin is still highly correlated to equities. It currently has a 0.75 correlation to equities, meaning the NASDAQ basically becomes the key determinant, the key chart to monitor when we're evaluating Bitcoin performance. We can see the correlation matrix is very high. To the NASDAQ, Bitcoin has a 0.75% correlation. To the S&P, it's slightly less, 0.63, because Bitcoin tracks tech stocks more than anything. Bitcoin trades like a tech stock. It trades in a slightly more exaggerated fashion, so it swings more large, it declines, are more rash, but for the most part, it's still tracking the NASDAQ almost to a T. So when we track Bitcoin, the first thing we have to look at is how the NASDAQ's moving. Now, for short-term traders, you'll be looking at the futures and you'll be waiting up for the stock market open at 9 a.m. US time because that's going to give you your short-term trades, because Bitcoin often preempts the NASDAQ, and then when the NASDAQ opens, that's when Bitcoin will either flip bearish if the NASDAQ flips bearish after futures trading, or can flip bullish if the NASDAQ overperforms. So overall, this is the chart that I'm looking at most heavily at the moment. Now, I've drawn in this horizontal resistance, which is the previous level of support, and since then we have broken up around 10%. However, a pullback to this level would mean a drawdown of roughly 9.7%. So if we do come down 9.7%, I think it's realistic to expect at a 0.75 correlation matrix that Bitcoin goes down 12 to 14%. Now, a 12 to 14% move in Bitcoin, obviously, dictated by the ETH Bitcoin chart, the old Bitcoin charts, would result in roughly, a 20 to 40% move downwards in the alts. So it all starts with the NASDAQ, and that's why I use the NASDAQ to substantiate my trading, substantiate my DCAs, because this is the first thing that I want to look at every day in the morning. How's the NASDAQ trading? Is it showing strength? Is it showing weakness? Because that's going to give me a much better idea of when to DCA and when to open trades and overall market sentiment. So, my worst case scenario for the NASDAQ would be, a pullback to these pre-2020 highs, which would be a 22% move, potentially going down to, the 2020 lows. That's a 45% move. I don't think that's happening. I think that's very, very unlikely. What I think the more likely scenario is we come down, we test this support line here, an 8.25% move down. Obviously, that would affect Bitcoin, but that's, I think, the more likely scenario for the NASDAQ. Remember, as we just discussed before, QT is going to affect equity valuations. We can't ignore that. Of course, a lot of this has already been priced into the market, but it's unlikely to see a drastic pivot in the NASDAQ if some of these macroeconomic conditions don't clear up slightly. So that is the third chart that I'm heavily looking at. Very interesting to note is that you can track against this Bitcoin chart, you can track the NASDAQ. And I think, so if you click this little plus button on TradingView up the top, you enter QQQ, which is the Invesco NASDAQ 100 index. You can track the NASDAQ price performance against Bitcoin. So if we go, let's say, to a 4-hourly chart, we can see when things are diverging. So we hear the term decoupling thrown around in crypto quite often. That's the holy grail of many Bitcoin investors. The day that Bitcoin trades in its own right, doesn't rely on equity valuations, and can trade on its own and can get rocket fuel without relying on the NASDAQ. Now, this is certainly a scenario that I think will occur in the future. We're probably many, many years down the line from this actually occurring. However, in the short term, we have seen variations. For example, when the NASDAQ started pumping here, we saw an increase of roughly 6%. The Bitcoin price had only gone up. Well, in fact, it declined 0.75%. So we saw a temporary decoupling. Then the NASDAQ started to taper off, and then Bitcoin pumped later as a response. The likely reason behind why this occurred is because if you were an investor with fresh capital sitting on the sidelines, it's much more likely that you would deploy capital to the safer assets, which, obviously the stock market's considered safer, before going, with a more risk-on approach in terms of Bitcoin. Bitcoin. So I think what happened was many investors with capital parked on the sidelines saw, stocks as a better risk reward entry at that time, which resulted in a slight negative decoupling for Bitcoin. But since then, investors get a little bit more confident. Bitcoin started rallying, and we saw this gap catch up a little bit. However, the NASDAQ has had a slight blip, and if I zoom in, we can see this a little more clearly. The NASDAQ's had a slight blip over the past few days, but Bitcoin has had a massive rundown, a much bigger correction of 9% versus the NASDAQ's 3%. So we are seeing Bitcoin still relatively volatile relative to the NASDAQ. So it's still, a chart that I'm watching, I'm monitoring. If a decoupling occurs, we want to be monitoring it. All right, now potentially for the most important chart of this list of 4, of course, these 3 are staples that you should have, in your charting arsenal. But this 4th one is one that I think is very advantageous to chart and gives us quite a large historical correlation to the Bitcoin price that we can use to substantiate trades. And that's the DXY, which is the US dollar index, which represents the value of USD versus other currencies. So the DXY operates like this. Overall, a strong dollar is beneficial for GDP growth and the US economy. Traditionally, when we've seen a strong dollar, we've seen percentage GDP growth increasing, which is healthy for the economy, healthy for labor markets, healthy for equities in general. However, Bitcoin trades inversely to the dollar, which means the DXY going up indicates a weakening crypto market, because that indicates funds are being funneled into the US dollar rather than into equities. And the DXY declining has the reverse effect, which indicates higher crypto valuation. So what we want to do is we want to trade Bitcoin against the DXY with inverse correlation. So we can see here that over time, this has been the case. When the DXY was decreasing heavily, that's when we saw the Bitcoin price motoring last year in May, all the way through to December, when the DXY started to increase a little bit. That's when Bitcoin prices typically decrease. So it does have an inverse correlation. So it's very important to track Bitcoin against the DXY to get a better idea of where markets could potentially be headed. Now, I did chart the DXY at the moment, and we can see that we're kind of in this range, a very, very big range on the daily at the moment. Just to give you a bit of a perspective of size, it's the 17% range, and this is at a critical level at the moment. So the critical level is the 103 to 104 zone for the DXY. Now, if we get rejected off the DXY, obviously, since Bitcoin trades inversely, this would be very bullish for cryptocurrency as a whole. So the ideal scenario, if you're a bull, would definitely be to see us push up to this trend here, get rejected, and start making our way down, which would, and you can't go backwards in time, so I don't know why I drew it like that, but we'd go up here, and then we'd start making our way down. This would be a rejection, which would result in a Bitcoin rally, obviously, since, they're inversely correlated. However, this is the danger zone, and this is why this chart needs to be in your watch list, because potentially, if the DXY breaks past this trend, retests, and starts increasing, this would be negative for Bitcoin. This would probably, result in, at least a few percent of a pullback at the minimum for the crypto market. So the DXY right now is a chart I'm watching heavily. We're approaching the critical zone, the critical point. Once again, if this goes down and starts heading lower, back down to the bottom of this range, that's fantastic for crypto. And that's what I'm hoping for as a crypto enthusiast. But being pragmatic here and looking objectively, we do not want to see the break of this resistance here. That would be negative for the crypto market as a whole. So that is a chart you need to have in your arsenal. So what is a practical way for you guys to monitor all these charts? Because I've just given you 4 very useful macro charts, but they're no use if you don't actually implement them into your trading strategy. At the end of the day, that is the most important thing, that you're actually utilizing them and monitoring them. So what I've actually done here is I've set up a very nice watch list on my TradingView. So obviously, most of you have a TradingView account, and if you don't, I'd highly recommend signing up, because what you'll get is you'll get these nice little folders that you can use to divert certain sectors of your portfolio or your watch list. So what I've done is I've created a main list. Now on my main list, this is a basic example for the show. You can have Bitcoin, you can have Ethereum, which are the main 2 charts. Then you can have the 4 charts that I explained to you guys on my Twitter thread, which are obviously ETH BTC, to get an idea of the ETH Bitcoin pair for altcoin rallies, Bitcoin dominance, which will give us an idea of where capital is being allocated. Is it risk on? Is it risk off? The DXY, which is the US dollar index, gives us an indication of where money is flowing. What's the strength of the US dollar? That will dictate how Bitcoin could potentially respond. And then you've got the QQQ, which is one of the leading indicators for Bitcoin at the moment, obviously, as we're still very correlated at 0.75 to equities. So these 4 charts I have in my main list as 4 charts that I'm monitoring. And basically what I've done is I put this into my daily routine. So the first thing I do every single morning once I wake up, obviously once I do this show, then I look through these charts. I look through the 4 charts. I see what's happened overnight on the short time frames. I see where the macro picture is sitting on the larger time frames. So then basically every single morning, I'm going into my crypto journey for the day with a very clear indicator of where the market's headed. I'm not going in blind, where's Bitcoin headed? Where's altcoin headed? I've got a very good idea of the direction, or at least I've got guidance from these charts to offer a bit of perspective. So it's very important to go and start your day, start your crypto journey, not by looking at your degen altcoin portfolio, but by looking at the macro charts and evaluating them, because that's going to give you a much better idea of where we sit as a whole. And obviously you can increase this division on your TradingView and have different folders. So you can have a main list, you can have a trading list, you can have a portfolio list. Make sure your trading view is organized. The one thing in crypto that's going to help you a lot is organization. So when you have organized watch lists, whether that be for your Hodl portfolio on CoinGecko, whether that be for your trading portfolio on TradingView, that's going to help you so much in this market because you're always going to be structured, you're always going to be organized, and you can evaluate things from a much cleaner position rather than dealing with a mess of charts all over the place. So that would be my advice for utilizing these 4 charts in your routine. Now, I wanted to talk about my investment strategy because I'm getting a lot of questions. What's my strategy? Obviously, you guys have seen I'm starting to do a little bit more trading at the moment. Speaking of trading, how's this long looking? We're only up 3.5% now. Bitcoin is, putting in a red candle on the chart at the moment. Let's see how that one goes. But obviously, since I'm trading a little bit more at the moment, I wanted to break down my portfolio for you guys into 3 categories. So the first category is my DCA zone. So this is my regular Hodl portfolio that I speak about a lot on the show. I talked about it a lot yesterday, the 5 altcoins that I'm looking at accumulating. Rand talks about it a lot. We talk about portfolio theory, and that's because the large percentage of, my crypto holdings, my net worth in crypto is geared towards my Hodl portfolio. Because I like to trade with a smaller percentage of my portfolio. So what I do is I DCA into the assets that I want to accumulate. I yield farm them. So I earn yield. I earn passive income on these assets. And over time, I increase the balances of my long-term holdings through yield farming and DCA accumulation. Now, in yesterday's show, I told you guys what my strategy is, but just to quickly summarize of all my income that is disposable, so all the income that I'm willing to put into crypto, 50% right now is going into stable coins. So potentially if this market goes lower as a result of QT, macroeconomic conditions, I've got some dry powder on the side to come in and buy some of these dips. And then the other 50% of my disposable income that's going into crypto is going into Bitcoin, Ethereum, which constitutes roughly 70% of that 50%. And then 30% is going into these L1s because I still think they're some of the safest risk reward plays in crypto right now. For example, Polkadot, which is technically a layer 0, but Solana, Near Protocol, some of these safer L1s. Obviously, what happened with the Solana outage today wasn't ideal, but it's still one I'm accumulating because I believe in the team long term. And what you actually DCA into will be totally dictated by your outlook and what projects you like. I can't tell you what to buy, but I can tell you what I'm buying. And I'm looking at some of the safer L1s in terms of my regular DCAs. But remember, I'm keeping that 50% of my income in stable coins. So I have some dry powder to buy these dips. You never want to be in a scenario where you're out of capital to DCA into these dips because we're going to get some great looks at some great entries over the next few months. You want to be in a position where you can capitalize from that. And then the last part, and probably the most fun part at the moment that I'm enjoying, is my trading portfolio. And this is a very small percentage of my total portfolio. As I said, I just put 5K into BYBIT. And I'm using that very small percentage to have a little bit of fun, earn some profits on the side, make a couple grand here and there, with a good trade, make a few hundred. Whatever I can make through a little bit of trading is what I'm aiming to do in terms of my trading portfolio, because you have to use a small percentage. This isn't me risking my crypto portfolio. If my trades went to zero, it wouldn't impact me because my hodl portfolio is frankly so much bigger that it doesn't make much of a difference to me. But using a small percentage allows us to keep the dollar amounts ticking over. So, whenever you need a little bit of cash, you can hit these trades, hit these high probability trades, which can, get a little bit of stablecoin balance accruing for you. So you have money to buy these dips. So in tandem with the yield farming, the trading for me is generating capital. Once again, very small percentage. And then out of that trading, there's a subset. So, a few percentage of that is going into BYBIT, so some leverage trading, and then the other percentage of that is going into swing trades. So these might be slightly longer term trades, which are narrative based. So if you see an L1 popping off, if you see a DeFi protocol popping off, there's room to still trade them technically with some swing trades. So that's also another thing that I'm open to in my trading portfolio. It's taking heavy profits because we can't just DCA into everything and hodl it forever. You need to be taking profits, right? So a percentage of my hodl portfolio and trading portfolio is geared towards, these quicker swings where I can go in and take profits and continue to accrue some stable coins. So those are the three constituents of my portfolio. It's my regular DCAs and hodl. It's my yield farming portfolio, which, ties into my regular hodl portfolio. And then it's the trading portfolio, which is split up into swing trades and leverage trading, as you can see over here. Of course, if you want to get involved with this trading, Sheldon show's amazing. I honestly can't stress this enough. I had so much fun last night. In fact, I was supposed to go to bed at like 12 o'clock because my shows are at 9 a.m. here. And I was up till 2 a.m. in this Cardano trade. I was like, fuck, should I close it? Should I keep it open? I ended up closing it. But it was so much fun to join Sheldon for those few hours. And I'm having a lot of fun with these trades. And, it's something I want to start sharing on the show as well, because I want to document my crypto journey. And if part of that journey is trading, then I see no reason why not to share my trades with you guys. So yeah, a little bit of a Bitcoin trade at the moment. Just, to go over that trade one more time. This is a trade, I have a pretty strict stop loss. Underneath this trend line here at roughly the 29K region. I am trading this looking for a little bit of a relief rally because obviously we did test this trend. Just this trend line here, we seem to be coming back down to trend. Potentially that's a decent entry for a long. Obviously set your stop loss strictly below this trend line. Unfortunately, I won't be here to live trade with you guys because, that's Sheldon's job to go and stream for 5 hours. I don't know how he does it. It must be very difficult. But yeah, that's a little trade I'm looking at. Whether it goes sideways or whether it does well, I'm not too concerned about because, it's a small percentage of my portfolio and I'm just having a little bit of fun in this market. And I suggest you do too. Obviously, if you want to sign up, you can sign up for a BYBIT account using the link in the description and become eligible for that $4,800 sign up bonus, or have your portfolio 10x live on the show. Rand's doing the 10x's on the show. I think he did it last night. And then I'm also doing it on my show when I get that Excel document sent across, because I want to start giving you guys some free money. I want to start, rewarding you guys for participating in, what's going to be an awesome journey in my opinion. So I hope you guys enjoyed this video. We covered a lot. We covered QT. We covered its impact on the market. I covered the 4 charts I'm watching. I covered my trading strategy. Quite, an in-depth show today. Ended up being a lot longer than expected, but I really hope you guys enjoyed the show. Remember, for BYBIT, no one would ever tell you to do this. No one would ever recommend doing this at all. But, if you hypothetically wanted to use a VPN to go and use BYBIT in the US, then we do have a NordVPN referral link on the main show. But obviously that's hypothetical because no one would ever want to use a VPN to trade on BYBIT. All right, I'll see you guys in the next show. See you later. Peace out.